Live from the Washington, D.C. area, all empowered citizens need to know about intelligent use of resources, smart governance, inclusive communities, smart industry, and healthy, thriving urbanization. This is Smart Sustainability, the TV talk about shaping a sustainable future in the digital age, with Nicolette DeVidar. Banks, the troublemakers are back. The question for many, how bad is it? This time, one should say. Given the economic environment we're in, what's happening? How big is the overspill into other areas? And what can we expect? Do banks still have a place in this unfolding future? Or is it a business model, artificial and unnatural to begin with? We'll talk a little bit more about this in a moment, that has lost its way and purpose a while ago and is simply done. Are we in a giant transitioning stage into a new financial reality? What does the current banking trouble mean for all of us? For crypto, for business borrowing, for real estate, and on and on. How can we, you and I, reasonably prepare? And should we care at this point? Our topic tonight. Welcome to Smart Sustainability. I'm Nicolette DeVidar. Thanks for joining us. It's been looming in the air for quite a while, for those at least who are a bit more attuned into connecting the dots of what's happening with businesses, rising production costs, effects of COVID shutdowns on companies, the noticeable dwindling or shrinking of big tech, and the underperformance of social media, where more and more people are indeed disengaging. Those of you who have blogs, etc., know what I'm talking about. The Atlantic even called it the end of social media back then in last November. All of this is an explosive mix. We got to see a glimpse of an explosive mix with the collapse of Silicon Valley Bank, which established itself as the tech industry's favorite. So when you look at tech companies being hit and then add the collapse of its favorite bank, making a connection is not that hard, although the narrative we commonly hear is usually pinpointing towards a management failure or isolated case to try to avoid addressing the real elephant in the room, namely that the banking system has been a coma patient since 2008. An isolated case, SVB, was not. The SVB collapse was the biggest real-time failure we all watched of a U.S. bank since the global crisis in 2008. SVB is a major lender to the tech industry, succumbed to a bank run and couldn't stem paying out people who wanted their deposits. SVB customers, in fact, were frantically pulling their money until the U.S. regulators intervened. Of course, the panic spread around and weaker financial institutions got equally infected. A week later, the second U.S. regional bank, Signature Bank, shut down, and a third, First Republic, was rescued. Then Credit Suisse came under fire, with their stocks going down 30%. A major bank with global significance came into the mix, causing further anxiety among other banks and, of course, people in the banking industry just as much as you and I at home. Now, for now, major disasters have been averted so far because central banks and emergency cash from some of the industry's largest players came to the rescue. The thing with the banking system, though, is a little bit like plugging holes, it seems. Every time something happens, there's a shift of a pile of money from this side to a shift of a pile of money on this side, whoever needs the cash injections, and money just shifts back and forth. In fact, though, the cost is something we all bear. So the question is it all over? US and European banks have lost 20% and 13 banks over the course of last week. The Fed, having to deal with inflation and the need to actually rise interest rates to combat inflation, is running on track to crash with the need of stabilizing banks. So banks in trouble make lending harder, and for many businesses that were cash-stripped during COVID, that comes at a very bad time. Many production businesses deal with rising costs. Some of them actually look at costs that have risen 100%. We also need to look at some of the numbers that already went into the rescue of these few banks. Now, nearly $200 billion in central bank support went into the averting of the collapse so far. The U.S. Fed is on the hook with $154 billion by guaranteeing all deposits at SVB and Signature Bank. The Swiss National Bank supported Credit Suisse with $54 billion with an emergency loan. And the Fed has agreed to record amounts of loans to other banks. $153 billion were borrowed by banks from the Fed in recent days, dwarfing the $112 billion that were borrowed during the crisis in 2008. The $318 billion that the Fed has loaned in total to the financial system is about half so far of what was extended altogether during 2008. But so far, we've just been talking about a few banks that we heard about. So what does that mean for your money in the bank? What about crypto? What about business loans and investments? And what about the possible future of the current banking system? Is this the big change to digital money? Joining me tonight is Manu Chowdhaury. He's CEO of DMA Link, a leading independent electronic trading venue for emerging market FX and precious metals. He's a tech-focused entrepreneur, venture investor, and, as he calls himself, psychedelic artist, subject matter expert on financial technologies, including electronic trading. And I'm definitely going to ask about the psychedelic part on that. Manu comes from a long background in trading and banking. He worked for Barclays and Lloyds Bank for over 15 years, among others, and is now very active in the crypto space. Also joining me tonight is Jarl Jensen, author of several books, including The Showdown of Good and Evil, The Big Solution, Stopping the Doomsday Machine, which advocates the restructuring of the banking system, Hacking the American Economy, Changing the Role of Monetary Policy, and a few others. He's a Danish-American engineer with a focus on economics and politics and founder of several tech-based companies. Thanks so much, the two of you, for coming on. Great to have you.
Thanks for having me.
Awesome.
Thanks so much.
Can you both hear me?
Yes.
Yeah, you're fine.
All right. So before we go in on the deep end on this one here, Manu, just for our viewers to know, what exactly is it that you're doing? Who are your clients? What are you doing day to day, etc.? Give us sort of an overview, please.
Yeah, sure. So look, we are basically essentially an electronic trading venue where banks principally and also hedge funds come together anonymously to buy and sell essentially foreign currency and also precious metals. Mm-hmm. We also have a sister company that does a very, very similar thing, again, with banks and funds for digital assets. So we engage with, I would say, probably some of the largest institutions in the world, both from a money management and from a banking perspective as well. So we are very finely tuned and very acutely aware of the volatility we've been seeing certainly over the last week and a half or so.
Yeah, I was just going to ask you about this because I know once you deal with all the banks, sort of this is kind of like you have to be basically like literally right in the corridor, so to speak, of all the whispers, right?
Well, yeah, I mean, look, to a certain extent, I guess we have to make sure that we're acutely aware of the macro environment, and again, look, our business is one that has to be a happy medium in between banks and money managers. So it's challenging managing all of those relationships, but yes, absolutely, we have to have our ear to the ground, and we have to be very aware of what's happening.
So, as a general reaction, would you say they're nervous?
Yeah. So look, I think you can look at. Let's look at the market. That might be a better indication of nervousness. We saw something last week that I never thought I'd ever see in my entire life. We saw the yield on the 2-year Treasury fall from just over 5% to about 3.84. That's a 12 standard deviation move, and I think when I did the maths earlier, because I was so shocked by the move, it was about 1.7 to the power of 33. I mean, that's an insane probability that should never have happened. So this is the larger move, to put into context, than we saw during the calamity of the COVID shutdowns in March of 2020. This is a larger move that we saw in 2008. This is a larger move that we saw in 9/11. This is the largest we've ever. So what it tells me is people are quite concerned, and by people I mean banks and investors are quite concerned, and essentially they're willing to put their assets in to the safest economy in the world, obviously, which is the United States. But it's not just a US phenomenon. This is a phenomenon around the world. If you look at the Japanese government bond, the yield in the 10-year, which was fixed at 50 basis points at the beginning of the year, fell to about 21 basis points on Thursday. And it didn't really recover once the Fed intervened on Thursday evening, on Friday either. So this tells me that there's something potentially a little bit larger bubbling under the surface, and something that could be around for a bit longer than certainly we're seeing from the media outlets.
So when you say there's something a little bit larger, are you referring to something that could spin into something larger than 2008, or just are you saying larger than just what we've seen so far in this incident? And I know this is playing a little bit oracle, but just from your analysis,
Yeah, look, this has all the hallmarks of being something pretty disturbing in terms of just how bad it is. And I think we will be in a recession, certainly in Europe, certainly the UK, certainly the United States by, I would say, at some point in Q2. Now, the decisions made by the Federal Reserve are going to determine whether we head into a recession or actually head towards a full-on depression. And that's essentially where we are. I think what we need is action from the Fed. And one point I want to make very clear is look, there's always this logic that's used to say, look, we have to hike interest rates to fight inflation. But if you look at what the definition of inflation is, and look, I'm not an economist, but if you look up the economic definition of inflation, it's essentially an increase in money supply. An increase in prices is a second order effect of a higher number of those dollars chasing either the same or less services and goods. So to say that effectively hiking rates will have an impact on inflation when the money supply was increased by 25% in 2020 is a nonsense. It's got nothing to do with it. And this is essentially fundamentally, I think, one of the things that really has swayed public opinion with what's happening with the Fed. The Fed essentially have hiked, and they've hiked so aggressively, they've really damaged the balance sheets of a lot of these banks, because effectively, if you think back at what happened over the last, 13 years prior to this cycle, interest rates were pretty much at zero in Europe for much of that period. They were negative. So as an investor or even as a bank, how do you get yield? Well, you buy longer dated government bonds that are yielding something more than zero, and essentially you hang on to them. Unfortunately, what happens is when you have longer dated bonds and you hike interest rates, the price of those bonds collapses, creating holes in your balance sheet. And that's exactly what happened to Silicon Valley Bank. Credit Suisse is a slightly different issue. I guess they've been caught up in a couple of problems. They had the hedge fund that imploded in 2021, which cost them about $5 billion. Then we had Greensill. Again, they lost about $2 billion in the back of that, and a couple other regulatory issues. So they were languishing for a little while. And actually, interestingly, if you look at charts of banks across the US and Europe, it's very obvious that banks like JP Morgan and Goldman Sachs were doing phenomenally well. They were almost at all-time highs. Banks like Credit Suisse and some others, if you look at those charts, were really struggling, really struggling. So the smart money already knew there was an issue with Credit Suisse weeks and weeks before we saw any problem in the market.
Now, Jarl, you've been a critic, so to speak, of the banking system as is. You wrote a book about re-engineering the banking system. So why did you write the book, and do you feel that this is the time where you feel a little bit, how should I say, well, I told you so in your book?
Well, I'm sure I'm not the only one who knows we have a problem with the money system or the financial system of the world. There's plenty of people who know that this thing is just not working or functioning. The question is, what do you do about it? What comes next? What is the right way to do things? And that's what I do for a living. I design products. And I make them, function to a certain specification using engineering techniques. It's how we build bridges that last for hundreds of years, carrying millions of cars without problems.
But bridges and cars are tangible, actual things. With banking or the current banking system, that's not the case. There's nothing tangible, actual about that. It's more, how should I say that, etheric.
The inputs into the economy, which is lending from the banks, it's a one input system, which means you can't control the system. So it's not that it isn't that it couldn't function like all the other things that we make work in this world. It's just that the banks are in control of the system, and obviously banks are built to lend money, so that is the only mechanism we have of controlling the system. And obviously, this is why we don't know what's going to happen next. It's why, there's people starving around the world. It's why we have so many problems. It's why we can't solve our big global problems, from climate disaster to pollution in the oceans. We can't solve these problems because we can't control our economy. We can't actually control the work that we do. And there is a straightforward engineering technique or techniques to create a sustainable, glamorous future. But as long as the banking system is, and the Federal Reserve and the central banks around the world, as long as their first job is to protect the banks and not to actually build a better future, we're going to just keep seeing one crisis after another, after another, after another. It's just going to keep going like this.
Manu, your reaction to that?
So look, I think there's a couple of issues that you're correct in your assessment of. We are going to, I think, unfortunately, can see more crises develop in the coming years, and that's really a function of the monetary system that we have. I wouldn't say it was necessarily a consequence of banks directly. And one thing I would say is that perhaps the most important role and the biggest concern I have for the current crisis we're seeing is, at the moment, it looks as though it's the smaller banks that are adversely affected. And the problem is that it is these smaller lenders that lend to small and medium enterprises across the US, across Europe. And let's not forget that 70% of all the employment is not created by the S&P 500, but is created by those small and medium enterprises. So without that bank lending, we're going to see a calamity, not just for the banking sector, but for the broader economy. The other thing I would say is, look, banks are very important for the way in which our economy functions and develops, if they're focused on lending to businesses to help essentially create growth. So what I mean by that is, as long as the lending is productive. So for instance, lending to real estate, that's a non-productive asset. That just creates bubbles. Not a great idea for banks to be doing. But lending so that corporations can hire people, so they can buy plant and machinery and actually build real world products and scale their R&D, that's actually non-inflationary. And that's really where I think the focus needs to be. So I don't think we necessarily need to re-engineer the system. I think we need to potentially repurpose and repoint it to do more good.
So what you're saying is really that, and I kind of alluded a little bit to the intro, because I think banks have lost their way of their purpose in a little bit, because I think the lending for several banks hasn't been sort of the #1 priority. And then I know also for a fact by several banks that they don't like to lend out to small or medium-sized businesses, and that's a huge problem. And actually the whole lending thing I wanted to talk a little bit about, because I think right now that's really a bad timing, because you have a lot of companies that got through COVID. A lot of the companies used their own liquidity that they had actually put as reserves, and they went through the COVID shutdowns, etc. So many of the companies are not in a position right now where they say we can still go back to our reserves and just use them up, because for a lot of them, the reserves have been used. And then you look at how the cost of production has gone through the roof. I mean, many of the real basic businesses like, and I know Europe is probably more hit than the US on this one, but many basic things like butchers, like bakers, like beer breweries, like the things we need for day-to-day life, they've been hit really, really badly with that. Many of them have to shut down because they cannot stem the cost of the increased production. So if we have a lending shortage, which presumably will be the result of all this right now, either way, then that's going to be a huge problem. So to some degree, I think we do have to engineer, well, we would have to find a way of getting money out, lend it more to the businesses and prop them up. Yarl, what?
Yeah, so look, it can be done. It's just a change of will. So look, I think most people think banks function that they have a whole bunch of money from depositors and they lend out a fractional amount of that money essentially to lots and lots of businesses. That's not how banks work. When banks lend money, they create money out of thin air. They don't need really fundamentally depositors. And there was several pieces of empirical research done by Professor Richard Werner in 2014 that demonstrated objectively exactly how this happens. So it's not so much that we need them to wave a magic wand. What we need them to do is make sure that the Federal Reserve is doing everything it can do to save and support the economy, rather than Jerome Powell doing whatever he can do to be remembered, and you're doing the wrong things for the economy, but the right thing for his legacy.
Yeah. Yarl, your take on that?
Well, I mean, we have to fundamentally change our mindset about how the economy works, or we can't get out of the mess. We have to understand that there's more ways, there are other ways of getting money into the system besides debt. This is this is what the banking system has done to the world. They have made us believe that the only way that money can be created is for the purpose of issuing debt. Now, that's a complete lie. Money is just information. We see it in cryptocurrency. We wire money all around the world. We know money is just information. Once you understand that information can be used for anything, it's how we see each other across the internet right now. Netflix gets downloaded from databases around the world. Information is highly flexible. We can do anything with it. And this way, we can actually design the world that is sustainable, that is, much more better for our future and our kids. We need to fundamentally change the definition of money so we can move to the next, to evolve society to the next level. Right now, we're going to be stuck in the muck forever, one crisis after another, because we have no idea what we're doing, what we're working on, why we do anything. We don't even have a purpose to society anymore. It's all about making sure that the banks exist and they don't fail. The whole banking system, imagine that, the combined work of every person on earth, our purpose is to make sure that the banking system sustains itself. That is just dumb. Once you realize this, then you see, well, if money is actually just information, we can actually design through engineering techniques and free markets and capitalism the world that we actually need to live in.
Manu, what do you think about that?
Yeah, look, I think you got a valid point. I mean, I'd probably say that look, gold is money, and if I had my way, I'd love to go back to the gold standard, because I think that would be a wonderful way of working. But the problem is that it's not just an issue with the financial and banking system. This is an issue with the political system, and fundamentally, the reason that we will never go back to a gold standard is because then politicians would not be able to spend money as they feel to spend, and that's the issue. They want to continue to spend, mainly in unproductive means, and until that ideology belief is changed or is forced to change, it's not going to happen. But I think you're right. I think we will see disaster after disaster. The reality is that at some point in the future, maybe in 5 years, maybe in 10 years, maybe in 15 years, I don't know when, unfortunately, this particular flavor of a financial system will fail permanently.
So we spoke a little bit about sort of at the beginning in terms of what you see in the market. So let's go back quickly to sort of summarize. What are we expecting short term? What is your main focus, for example, Manu, to look out for in terms of what develops for the next, I don't know, 2-3 weeks? What's on the horizon? What do you think would be kind of like key pointers that can sort of, either buy us some time or actually sort of steer us in a little bit of a direction or where we're going to go?
So look, I think the key thing to bear in mind here is to keep an eye on what's happening and try and read between the lines. So I'll give you, for instance, so Credit Suisse has just been acquired by UBS for 2 billion Swiss francs. Now, this seems like a great deal. This seems like a very positive move, and this should stabilize markets. One thing that I'm very concerned by, one thing that I'm deeply troubled by, is effectively what they've had to do is they've had to actually change Swiss law so they could do this particular corporate action without, and I repeat, without getting consent from shareholders. Now, this is an insane development. I appreciate that the time is of the essence, and we've seen a bit of a calamity with the share price last week, and with their credit default swaps going absolutely parabolic. Something has to have been done, which I agree with. Credit Suisse are one of 30 systemically significant banks, i.e. they're too big to fail, which I completely appreciate. But I think fundamentally, as a shareholder, you can't just usurp people's rights to make decisions and vote just because you have an issue with time. There are many mechanisms of voting. There's many ways of contacting those individuals and at least getting the institutional investors on side. It's not what was done. They decided just to ignore that. And that troubles me quite deeply. So I think what we have to keep an eye out for is how this particular flavor of crisis, and it is just another flavor of crisis, sadly, is remedied. And I think until we see decisive actions from central banks, until we see them cut rates significantly, we are not going to see this end in a particularly pleasant way. And look, if you cast your mind back to what happened in October of 2022, we saw the pension crisis in the UK. Again, what was the cause of the pension crisis? The cause was simply that essentially the Bank of England had been hiking rates, much like the Fed, at a rate that created losses for fund managers who owned very long-dated government bonds. But the issue was even worse because essentially they passed legislation, not just in the UK, but also in Europe and also in the US, that mandated pension fund managers to hold a certain portion of government bonds. They then passed further legislation mandating they had to get minimum returns or minimum yields. So the only way they could hit those hurdle rates was to have leverage, i.e. not just have a portfolio of 1 times leverage, but sometimes between 8 and 10 times. So this is the calamity that's been created by the overseers of pension funds, the regulator. So people are scratching their heads wondering how it happened. Well, it was previous policy. And this is the kind of stupidity we really need to stop from continuing because it is insane. And this is what troubles me more. So look, long and short of this is I think keep an eye on what happens to the market over the course of the next week and how these problems are remedied. That will tell you much more about the seriousness of the situation than anything else. And it will give you a bit of an idea as to how long this is going to last. Also keep an eye on gold because, look, again, most people seem to think gold is an inflation hedge. It is not. If it was, it'd be $10,000 an ounce rather than 1,900. It's actually a hedge against the failure of governments.
Well, but given where governments are right now, it's actually not a bad hedge, because when you look at, and I know we've had actually a show before on this one for our viewers to know also, where we talked about crypto and what to expect from the central bank, etc. And we had a member of the original policy committee of the Bank of England here, and he said that he would expect some very unpleasant developments in the next 2 years. So I think we're already in the first one. But we also talked about the problem that politics, and Manu, you mentioned that politics and financial, they used to be a little bit more separate, but in recent decades, they have become more and more merged into one big mass and a giant mess. And I think this is a problem where maybe hedging against both of those might not be a bad idea. Yarl, what do you think about that?
Well, first let me just state that I think gold as a currency would be an absolute disaster for modern times. I was talking about digital currency and its ability to be flexible and so on. In terms of what's going to happen next, I obviously look at it from a different perspective. It seems that there's a little bit more planning behind what the Federal Reserve is doing. And it does seem, when you look at what's going on in the Ukraine, global dominance is at play here. The US dollar is just so powerful. I mean, Ukraine, China, whoever has zero chance in a war against the dollar. And it seems to be more of an end game here for global dominance with the US dollar. And the moves they're making are very simple. They are allowing banks to borrow money from the Federal Reserve directly to cover any of these short-term investments they made with deposits or wherever, and they're just going to bridge that gap with an interest rate attached to it. And from here, I believe they will continue to increase interest rates for the one purpose of global dominance. And I also think you can look at how the government has been interacting through social media, controlling communications. That there's a bigger game afoot here, and it's global dominance. And that's the real threat now, is that the US government and the US dollar is going to dominate the world going forward. And if that's not in check, if that's not for the purpose of freedom and individual rights, which really seems to be in question at their actions. So in my opinion, look for much higher interest rates coming, at least above 6% to just completely crush inflation, but they're also going to crush other currencies for the purpose of global dominance. I think that's actually what they're trying to achieve here. Bank failures and these other things, it's just print the money, make it go away. That's the playbook now. They've got QE. Now the QE they're doing now is QE with interest. And the reason that makes sense is the global dominance of the US dollar. That's the way I look at it.
Now, Manu, you work also with central banks, I believe, as clients. Are they kind of, how should I say that, how do they look about the dollar development at this point? Can you share with us?
I probably can't go into too many details because they're European central banks, but look, I think Yarl, you're right with the point you raised. Actually, it's a very interesting observation. So in terms of the hiking, you're right. I don't think it's about inflation. I think it's about war. Look at what happened during the Vietnam War. Look at what happened to interest rates and inflation in the United States also. I think we're in a very similar situation. So I think that is hitting the nail bang on the head. But I think that unfortunately we have a situation where if we continue to hike, we are going to end up going into a depression. And I guess the choice that we have now is we either curtail the hiking, or we reverse it, or we are going to face some serious consequences. And the problem is this: is that you look at the situation that we have now. We've obviously got some degree of animosity towards China, more so than we used to, and obviously towards Russia. But there's a fundamental issue, and people forget just how weak elements of the Chinese economy are. So one of the biggest problems China faces today is its real estate market. And I was absolutely shocked to realize that the home ownership in the US is about 65%. It's about 66% in the UK. In China, it's now 89%. By the way, that's down from 92% 18 months ago. They've been cutting rates for about 24 months, and their markets are collapsing with the numbers that are being reported. Across the US, we're having issues, certainly in most states, notwithstanding obviously Florida and Texas, where homes are still selling for asking. But certainly in Silicon Valley, they're getting absolutely destroyed. So look, we have a lot of vectors here that I think could really damage the consumer. And I think after the 2 years, the COVID nonsense as well that we had, we're in a very challenging period of time. And I think if decisive action isn't taken really by some of the central banks to reduce the burden that is on these individuals, then we're going to see businesses crack. And in fact, corporate bankruptcies are at 2008 levels.
Yeah. Now, actually, when we look at history, though, depression, so economic issues, depression, and war always went hand in hand. All throughout history, it's always been that same sequence: the currency wars, the trade wars, the real wars. Always, when you look at this in history, this is always how things have evolved. So I would agree. Actually, Jarl, your observation, I think, is hitting probably the nail on the head here. So that is something that I think people have to be a lot more vigilant as people also, because I think that also comes back to taking a little bit responsibility as a citizen and putting pressure on your government and actually say, so do we want peace or do we want war? So that's really an important thing. And even if they think that they can control everything or banks can control everything, at the end of the day, people, though, they're the ones who take it to the street. So that's one thing. Now, with real estate, the real estate, I read a very interesting number, actually. And I was actually thinking about talking a little bit about the ripple effect on the real estate. So in the United States, in California, which is actually the most expensive real estate market in the United States, so house sales dropped in January 23, 42.8% over January last year. That's a big number. And this was before we had all of this banking stuff coming up. So where are we with that?
If you have higher interest rates, real estate is going to go down. Definitely would not be investing in any real estate right now, especially if the interest rates stay high for a longer period of time. If they don't come back down, real estate has nothing to stand on. I mean, their valuations are based on low interest rates. High interest rates is just going to kill it.
Yeah. So real estate is going down. Small businesses are likely going to be wiped out. medium-sized businesses likely to, if we get the banks sort of, the smaller banks, if they get hit, those are the ones who actually lend out money. I think that's a big issue. Now, Manu, we're being asked a lot, of course, so what happens to crypto? Let's talk about that space in all of these uncertainties. Where are we with crypto? Where do you see it go? Is it still something to watch out and be valid for? And what do you expect going forward?
Yeah, absolutely. Look, I think I'm a huge fan of crypto. I think if you look at what's happened, say in the last week, we've seen a reasonable rally, and the reason we've seen that rally is because people have grown quite concerned about what's happened and what is happening to the banking sector, and have shown their frustration at some of the remedies that have been shown by buying digital assets. So look, I've always been pretty bullish in general, and what I'm quite intrigued by is the decoupling. So normally, whatever the S&P did is kind of what Bitcoin did, or sorry, the Nasdaq even, and that's changed now. And I wonder whether this is going to be a continuation. So look, I think ultimately the move in crypto is going to be higher. The only issue we have to be mindful of is that depending on the scale of the current crisis, there could be another leg, perhaps a little bit lower before we see a return to a significant rally. But no, I'm super bullish, and I think that anyone who has a portfolio to hedge against certainly inflation, they should definitely have a holding of a small percentage of digital assets.
Have banks increased in the last year their digital assets, or have they decreased their portfolio?
So the problem you have is the capital requirements for holding digital assets on your balance sheets are extremely high. So what most banks have done is set up essentially arm's length entities or spun out digital asset divisions, because it's not cost effective to do it. But what I can say is certainly in the last 12 months, we have seen a significant increase in interest, irrespective of what's happened again last year with Sam Bankman-Fried and the collapse of FTX, and irrespective of what's happening right now. So, but by the way, those banks are mainly European; they are not US, which I was surprised by. The one time ever that you've seen a game-changing technological evolution, and the US isn't dominating it.
Oh, that's interesting, because I was going to ask if this sort of like evenly spread out. Is this sort of like banks doing this like in Asia and Europe, in the United States, like everywhere? Or is there, is Europe sort of really on the edge on this one?
Europe is very much in the lead, and if you look at what's happening and what's happened, they've been pushing forward very aggressively. And I think, look, one thing I'm confused by, and I don't understand it. Look at every other industry in the world. It is dominated by the United States. Now, why you'd want to take an industry that could be several $1 trillion worth of annual revenue for these organizations and kick it to Europe? And by the way, I live in the UK, so I'm delighted to receive it, but it doesn't make any sense. And look at what's happened with Signature Bank. So Signature Bank is going to be acquired by, I believe, Bank of America. But one thing that the FDIC have made very clear is that it is no longer to offer any crypto whatsoever, be that fiat on-ramps, off-ramps, or doing any business in the digital asset world. And again, this is a little confusing because it's a strange thing. So look, I think some of the regulatory hurdles that you have in the US, some of the rather strange things your regulators are doing, I think have curtailed the development. Now, don't get me wrong, obviously the likes of JP and Goldman's, clearly those guys are pushing ahead, but I would say the vast majority of other US banks are light years behind. And it's probably now more the domain sake of the European banks. Let's not forget, if you look at digital bond issuances or commercial paper issuances that are digital, dominated by European banks.
Yeah, that's interesting. Jarl, what are you making of this?
Well, again, I think the fundamental workings of cryptocurrency is staking. This is what allows cryptocurrencies to increase in value over time, because you basically put your coins away in a wallet that prevents you from trading it, and that wallet earns you more coins. It's kind of like an interest rate, but this is the fundamental mechanism that allows cryptocurrencies to work. Now, most cryptocurrencies have an interest rate of around 6 or 7%. There's other variations and so on, but it's a concerning thing. So what the concern is that if the Federal Reserve moves interest rates up to above 6 or 7%, or even close, 5%, it is just so much safer to put your money into money markets than into cryptocurrencies. So the rally as of late is for Bitcoin And the idea here is that Bitcoin is safe relative to banks, and so you're getting this a little bit of a run up. I think it's short-lived. If the Federal Reserve keeps raising interest rates, there's just no reason. And there's another problem with Bitcoin per se, and that is they only have 9% more to mine, which means when you stake your coin, you no longer collect interest rates. That fundamentally breaks down the whole concept of cryptocurrency. So Bitcoin has dated itself. In other words, when the 9% are finally mined, Bitcoin is done, and that's a big problem for Bitcoin. So that means the other cryptocurrencies, which are much more advanced, they're greener and so on, are more advantageous. But if you look at the current run-up, it's pretty much Bitcoin only. Now, you look at the other things, the big global picture, which is what I really like to look at. Why is cryptocurrency moving to Europe? Why is the United States not interested in it? Because they own the dollar. Why would the United States want a new currency to take over global commerce when the dollar dominates? So the United States is not interested in cryptocurrency taking over, right? So you really have to start looking at the United States government, and I'm talking about the agencies like Federal Reserve, CIA, all of these agencies. What are their intentions? Their intentions are to dominate the world, even if it's at the cost of U.S. citizens. They don't actually care about U.S. citizens, the fact that they suffer and they lose their jobs. You can tell that by, they don't really care about U.S. citizens. That's not why they do things. They do things for global dominance because these people think they're smarter than everybody else. That's why they thought sheltering in place was a good idea, right? Even though it turns out to have been a terrible idea. That's why we're in a crisis right now. These people think they're so smart and they want to run the whole world, making decisions for humanity, even though we're seeing them making mistakes after mistake in real time. This is really fundamentally what's going on here with cryptocurrency. Dollar dominance is what the US government wants. They want to control the population of the world and put into place some pseudo-efficient system that will suck. We actually don't want this as if somebody who's free market capitalistic, who believes in the freedom of the people. This is a dangerous time for the US. I would say that the hope in cryptocurrency is that everybody understand to take some of your money and put it into cryptocurrency, not for an investment, but for the sake of actually having the opportunity of getting off of this dollar, which is going to create a global entity that controls the world. We're already there basically, but it's just going to get much more intense.
Those are pretty clear words. Manu, what do you think of that?
So look, I think there's a lot of truth to what you said. I perhaps wouldn't necessarily use the same language, but yeah, look, I think you have some very valid points. The one thing I would slightly disagree on is just in terms of the value of things like Bitcoin. So I would say the reason that I initially got interested in Bitcoin in 2017 after walking away from it stupidly in 2012 was because this was the first time in history we had created a digital signature that could not be forged, and that's really powerful. And you're right, there are other digital assets like Ethereum that have far more use. It's a multi-use blockchain. What I would say is some of the latest upgrades have made it a little bit less ideologically like it used to be. So for instance, with Bitcoin, you can have things such as tainted Bitcoin if it's used for some nefarious act. But irrespective, those transactions are written to the blockchain. What happens with Ethereum now is that actually some of the validators can suspend transactions before they ever happen. And that's I think that goes against the grain of certainly of having a utility function of freedom or empowering the average person. What I would say again, just in terms of, I guess some of the comments Jarl alluded to in terms of central bank digital currencies. Look, I think wholesale central bank digital currencies are a fantastic idea. I'm a big fan of those. I would agree with what Jarl says regarding the retail central bank currencies. I see no point, certainly in the UK, certainly in Europe, and probably the United States, for implementing them because they don't really serve any function. They say that they're there for ease of payments. Well, we're going to have FedNow launched very, very soon, which is basically like a slightly poorer version of SEP that we've had in Europe for the last 15 years. It doesn't really make a lot of sense to have this retail central bank digital currency, unless, of course, the real purpose of having this is to have programmable money. and therefore, again, have an impact on individual freedoms, liberties, and have more control.
Yeah, it's the control issue is definitely a real issue. I mean, that's just what it is. And I think it worries a lot of people. So I've talked to a lot of people on the street and in interviews and things like that. There is definitely a consensus among the people in the United States, but also in other countries, where the control issue with the central bank controlled digital currency is big. Now, on the one hand, people want stability, that's clear. But on the other hand, the control of everything, that is an issue. And I don't think we found a solution yet to really navigate or address how do we bring those two under one hat, so to speak. I think that's going to be really, really challenging, and this seems to me more where there a design aspect needs to go in, so we actually properly address it, and how can we prevent an abuse of power for having an overlarge government or group of people who's really in control of that. So I think that is a big issue. Now let's play fairy godmother here for a moment. If you had a fairy godmother that would come to you and say, I grant you one wish, for example, for the next 2 weeks, what would that be? Yarl, I'm going to start with you on this one. And I meant in terms of, financial or economically. No personal stuff.
For me, it's very, it's not very difficult to fix the world. Every U.S. agency has to change its core mission policy to fundamentally put people first. Every agency in the U.S. was built and funded by lobbyists. And so the whole purpose of these agencies has some connection to, especially the older agencies, to the Rockefellers or J.P. Morgan. They all exist for the purpose of some, sort of basically not for people, right? From the FDA to the Federal Reserve, they don't actually exist to make our lives better. And so if you just change the mission, the policy, the mission policy statement of these agencies to putting people first for creating a better world, these problems will actually go solve themselves. And then when we're talking about the Federal Reserve, it actually means that you fundamentally re-engineer how this policy works so that you don't constantly save the banks and screw the people. You reverse that, you save the people, and if the banks don't do so well, that's okay, because at that point, in that kind of a system, the banks are just something that works as a lending entity. It's not the entity that controls the economy of the world. So that's all you got to do. It's not actually that hard, but you obviously it is a political thing. You do have to convince the politicians that you need to change these mission policies of every single agency. But if you do that, that's it. That's the key.
Yeah, but,
the rest of the world's going to follow suit.
But here's the thing. So if you need to convince politicians that are actually kind of part of the same system, I think that's the first problem that we have. And then I'm not sure actually the political system, the way it is going to survive what's coming. I think that's also something that's actually on the line, and we see this in many other countries and also in the United States. So there also might be some changes with that. The other thing is, I like the idea of giving a different purpose for the agencies, Jarl, but then here's the thing. Haven't we seen enough of those little PR stunts of saying this is our mission, and then what they do is not exactly what they say they were created to do? So there's got to be something in there that also enforces that that's exactly what the purpose of these institutions is. And many probably are not even valid. I think we also need to look at the validity of institutions. Which ones do we still need? Which ones can be adjusted and restructured? And which ones, quite frankly, have to be shut down because they no longer have a place? That also, I think, is something that probably falls into that. But it's sort of then we need to think about how would that be reinforced in terms of, making it really so people do it. There's not just an ethical component, but there's actually how should I say that, a moral citizen component that I think we haven't seen in the world in the last, 30, 40 years?
Yeah, but I mean, this isn't something you have to invent. I mean, companies all the time have, bonus structures. They fire 10% of the staff if, objectives aren't met. you basically need a carrot and stick to meet the objectives that satisfy or make the world a better place, whatever. But I agree with you that a mission statement, I have built and run companies, so I do know that a mission statement can be vague. It needs to be very specific policy statements. The monetary policy at the Federal Reserve has to be fundamentally rethought and re-engineered for the purpose of making a better world.
Now, Manu, if you have the fairy godmother and she would grant you one wish, what would that be for the coming few weeks?
I wish I could go back to the 1990s. They were good times where we kind of looked to the future and had hope in our hearts. But that's not going to happen, obviously, right? So look, I think realistically, the first thing I would want is really, I think we really need to de-escalate the situation we have in Ukraine and find some way, whatever that is, for a peaceful end to this proxy war that's going on there. This is really something that's going to cause some major issues over the next couple of years, and really has to be ended. I think the other thing, and Yarl, this goes kind of maybe in the opposite direction of what you've suggested here, is what I think we need to have is, I think we need to have more banks. But I take on board your points. I think we need to have banks that are local. So local banks that lend locally to local businesses that are accountable to those businesses and owned by those communities. So local
I was going to
banks.
say, wouldn't that be so that communities actually could own that? I think communities should own that. People should have ownership in it.
Absolutely. And I think that's the only way to take them to task and hold them accountable, because Yarl, you're right, 100% correct. And what you say is that unfortunately you have these huge distortions of the focus of organizations, because they are trying to do everything they can do to police shareholders for the next quarter's numbers. And that's a problem. So there's no long-term vision in these things. Everything is very myopic, and that causes behavior of some of these institutions that is not great, as we've seen, obviously. The only way to remedy that is to make sure that they are fully held accountable and taken to task by those stakeholders who are in that jurisdiction that they operate in, and are owners, irrespective of how little, but the owners nonetheless of those organizations. And I think that would help remedy the majority of these issues that we're seeing. And look, fundamentally, what we need to see, or what we want to see, is the US, Europe, the rest of the world flourish and economically grow. I think the problem you have right now is I don't really see a way of that happening in a sustainable way. You know, I think there are things that can be done to temporarily put a Band-Aid on the shotgun wound, but ultimately the whole thing will unravel.
Yeah, and I think it's always.
I just wanted to, because I actually wrote about that in one of my books.
Did you? Okay, right.
No, it was a local bank. If you ever heard of Black Wall Street, if you ever looked that up, it was a massacre and a terrible story. But the point was, there was this local regional bank, and the entrepreneurs just grew, and the money circulated in that local community. Guess what happened to that bank? It got destroyed. So when the Federal Reserve was created, they got rid of all of those local communities that basically had their own pool of money that they just kept cycling through and had their own little microeconomy.
Yeah, but I think
they're looking for global dominance. They're not looking for microeconomies.
But I think that's exactly where I think the clash is coming in, because I think the consensus among people and people in local communities is much more that we are forced to organize ourselves and sort of make a living in small communities. So you see a lot more ideas being implemented in smaller communities. You see a lot of innovation in smaller communities. You see a lot of people sort of almost having like parallel societies coming together, independent of what the politicians or the governments do, because simply that's, yes, I saw it, because simply that's, people realize we cannot trust the government, we cannot believe in the government, we can't trust anyone there, and by the time something comes through there, usually it's disastrous. So there are a lot of parallel societies and communities and people who kind of really spring up and put action in there. And I think for me, so if my fairy godmother comes, I wish that we can harness all of that and really empower the people in local communities with local banks, with pooling local money, having our own energy sources, be independent, self-sufficient to bring this up. And I do think we're going to see a big push on this going forward as we go along, because there are a lot of people working on this and a lot of people just had it. So I think, what we're seeing is, yes, they still want to control it, but it is One day or sooner or later, it's going to come to a clash. There's no question about it. We have 3 minutes left. I want to talk very briefly about how do we prep for the next, what's unfolding. Any advice you would give to people that you would also, like, if think about it, what you would tell your family in terms of how would you prepare, what would you look out for in the next 4 to 6 weeks? Yarl.
Put your money in money markets. I mean, it's safe. I don't think there's going to be any more trouble with banks or otherwise. The Federal Reserve will just, they already promised $2 trillion towards this. So I don't see any more trouble from banks or other entities. I mean, these pension funds, that might be a problem. I don't know where that could go, and that could be big. But other than that, the Federal Reserve is just going to calm the markets down, provide tons of liquidity while raising interest rates. Again, the real goal is dollar dominance. So yeah, that's what I would be looking to do.
But you also suggested before that people should put some money in crypto to get it out of the dollar dominance scheme.
Well, if I'm right, again, I don't believe that there's going to be enough people putting all of or enough money into cryptocurrencies to fight the flight from cryptocurrencies with higher interest rates. I think the pressure on people needing dollars for making debt payments, which is really the biggest draw to the dollar, it's just too much. And all these assets are going to crumble, from real estate to stocks to crypto. They're all going to crumble under the pressure of the mighty dollar. And ultimately, that's the goal. And then you have this U.S. government, these agencies dominating everything in the world. And they think that's a good thing. I don't, but they do, and that's what they're going for. It seems to be that's what's in play here.
Yep. Manu, your take?
Yeah, so look, I think slightly similar. So I think you need to be a little bit longer of cash now than you have been historically. I think there's going to be opportunity to really pick up some bargain stocks over the next couple of weeks. I think look, I'm hopeful this calamity doesn't become any worse before it gets better. But I guess the only thing I'd say is that it's the Fed's actions that have driven us to the point in time where this has happened. So it's a little naive to think, I think, that the Fed is going to be able to solve them all. And it's quite clear with the facilities that are put in place last week, just looking at the action of the 2-year Treasury and the subsequent collapse of the yield, that the market isn't buying it. So yeah, look, I think absolutely. I think have some money definitely in crypto, have some in precious metals, and have some in cash, and wait to see what happens with the fallout. I'm hoping that this particular flavor of crisis is remedied by May, and then we begin back onto a slightly healthier trajectory with lower rates, but or at least stable rates rather than higher rates. Yeah.
Any last words? Has to be one word. I'm going to go over to Jarl. Any last words for our viewers?
Hope.
That's a good one. Manu, what's yours?
I'd say buy art.
You what? Buy art?
Buy art, yes.
Yeah, that's actually really going up, as have watches, I've noticed. Luxury watches have actually outperformed many of the other things that are there. Thank you so much for coming on. It was a very interesting topic. Great discussion. So thanks so much. And thank you so much for watching. I hope you learned something from it. Bring a little bit of hope. We'll need it. And be vigilant. We'll see you next week on Sunday.